Commodities are the raw materials that power our world. Understanding how they are traded helps investors grasp global supply and demand. A commodity is a basic good used in commerce that is interchangeable with other goods of the same type. These goods are generally grouped into four sectors: energy like oil, metals like gold, agriculture like wheat, and livestock like cattle. Traders often use futures contracts, which are agreements to buy or sell a specific quantity of a commodity at a set price later. While some traders actually handle physical goods, most investors trade financial contracts to gain exposure to price movements without needing a warehouse. Commodity prices are highly sensitive. Weather patterns, geopolitical tension, and changes in global demand can cause rapid shifts in market values. Because they don't always track with the stock market, some investors look to them as a potential hedge against inflation. Commodity markets are complex and often involve high risk. Always do your research before participating. Subscribe for more finance basics.